Today, we're discussing a topic that's got investors, entrepreneurs, and anyone thinking about their financial future asking some big questions. Capital gains tax. We're exploring 10 countries that don't tax capital gains, presenting some interesting options for those considering alternatives to the UK, which is set to substantially increase its capital gains tax. Now, capital gains tax is essentially a tax on profits from selling assets like stocks, property, or businesses. And in the UK, hikes mean that more of these profits will go to the government instead of the investors who took the risks. This is unfair. After all, you're the one putting up the money, taking on the risk, and ultimately creating value. So let's take a look at 10 countries that take a different approach. One where they let you keep your capital gains. Let's start with Belgium. Surprisingly, Belgium has no capital gains tax on private investments for everyday individuals. That's right. Unless you're a professional trader, your profits are protected. Belgium respects the idea that if you're taking the risk, you should keep the reward. Next up, we have Luxembourg. Known as a low-tax country, Luxembourg exempts capital gains on assets held for more than 6 months. This makes it attractive for long-term investors who value financial stability without the fear of taxes eating into their gains. Moving to Switzerland. Switzerland doesn't tax capital gains on assets for private individuals. If you're a regular investor, you get to keep all your gains. This country understands that encouraging investment is better for the economy than taxing success. On to Malta, a Mediterranean gem with favorable tax policies. Malta doesn't tax foreign-sourced capital gains for residents and provides some exemptions for local assets too. Malta's approach is about encouraging wealth without punishing success. Then we have the Czech Republic. Here, there's no capital gains tax on assets held for over 3 years. By rewarding long-term investments, the Czech Republic supports those with a forward-thinking approach, letting them keep what they earn after years of commitment. Estonia is next. For anyone serious about protecting their wealth, Bulletproof Asset Protection is a must-read. This special report provides valuable secret strategies to make sure your money can never be touched or even found. You'll discover how to easily open secret bank accounts. You'll find out how to establish anonymous companies and trusts and the best jurisdictions around the world to keep your assets private and secure. Follow the link in the description to find out more. Estonia has made headlines as a tech hub, but it's also investor-friendly. There's no tax on reinvested profits or retained earnings until they're withdrawn, which incentivizes reinvesting in growth rather than facing immediate taxes. Now, let's look at Georgia. Georgia is becoming a favorite for financial freedom, especially for non-residents who enjoy capital gains exemptions. Georgia believes in letting investors decide what to do with their profits, fostering a hands-off approach that's rare today. Now to the other side of the world, we have New Zealand. New Zealand is another country that doesn't have a general capital gains tax. While certain property transactions are taxed, your investments are largely safe from capital gains tax. New Zealand champions the entrepreneurial spirit, showing that wealth creation shouldn't be met with high tax barriers. Now on to the city-state of Singapore. Singapore has no capital gains tax and is already known as a global economic powerhouse. Here, the philosophy is simple. By not taxing capital gains, the government encourages investment and wealth creation, trusting people to drive the economy forward. Finally, we have Hong Kong, a city that values financial liberty. There's no capital gains tax on profits, making Hong Kong one of the world's top investment destinations. Hong Kong shows that respecting financial independence can lead to rapid growth and prosperity. All right, that's our tour of 10 countries where you can keep your gains without government interference. It's a stark contrast to the UK, where higher taxes are putting more pressure on investors and entrepreneurs. Remember, investing and creating wealth involves risk, and it's only fair that those who take the risks get to keep their rewards. If you're considering a move or looking to invest internationally, these countries offer alternatives that respect your financial freedom. Thanks for tuning in, and if you found this useful, don't forget to like, subscribe, and share.